If you're somebody who's looking to start trading with only $500, then this is the right video for you. What's going on, everybody? My name is Brandon Trades, and in today's video, I'm going to be showing you how to start trading with only $500. If you guys don't know, when I first started trading, I only started with $270, and now trading is my full-time income. But real quick, before we can hop into the video, what I need you guys to do is make sure to click that like, as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Okay, so if you're going to start trading with only $500, first thing you are going to have to do is open up a cash account. Now, with a cash account, this allows unlimited day trades. However, what you need to take into consideration is if you use $300 today, and let's just say you make $50, you are not allowed to use that $300 plus your profit until the next trading day. Now, on the flip side, there's a margin account where if you have a margin account, you can only take 3-day trades per week. So do not use Robinhood. Open up a cash account on either ThinkorSwim, Tastyworks, or Interactive Brokers. I think even Webull offers a cash account, but that is going to be the very first step. That way you're not limited to only taking 3-day trades per week. Now, the other thing is with a small account, you need to find a basket of small account names. So some stocks that you could trade as a small account is going to be Apple, SPY, QQQ, United Airlines, Delta Airlines, so on and so forth. I'm going to be leaving a link down in the description on how to basically create your own day trading watch list. But if you're going to start trading with $500, I don't really recommend swing trading, because with swing trading, you're going to have to put more money at risk and you're going to have a wider stop loss. So if you are swing trading with a small account, you could blow your account fairly quickly if you're not right. But yeah, so I would say stick to day trading for now and then mainly trade those smaller account names. I would personally say trade SPY and QQQ is going to be perfect for small account traders. Now, the other thing is you do want to have a day trading strategy. So if you guys are new to the channel, I do have tons of videos on how to day trade, as well as sharing my strategy with you. Again, make sure you guys are subscribed. I'm super close to 20K subscribers, so make sure you guys are running it up. But you only need to have a select few strategies to utilize when day trading. So one, we can actually talk about this. I ended up taking a day trade today on QQQ, and of course, I paper handed this thing. I should have made well over $1,000 to $1,500 on this. So anyways, this is going to be known as the ORB strategy. So with the ORB, what it is it's the first 5 to 10 minute candle. So we're actually going to be looking at the 10-minute because that is what I base this trade off of. So if we're looking at the 10-minute time frame, here was the high and here was the low. As we can see, the stock traded in between this range. However, when it actually broke out, it was right here. So now if you break it down to the smaller time frames, the 3-minute and the 1-minute, we can see that the 3-minute was squeezing with the light blue momentum with the up arrow on the TTM squeeze. And on that 1-minute, we were getting the early in and out entry indicator, basically telling us that QQQ was ready to break to the upside. So as QQQ broke above this 339.2 level, that is when we went long in the Discord server and we purchased the 340 calls, and I called this out in the live voice chat. And as you can see, QQQ just ran up substantially in price. Now again, if you're a small account and you're trading with $500, you are going to have to trail your stop loss. You're going to have strict stop losses. So I would say anywhere from 15 to 20% should be your stop loss on your trades. Now, the way that you are going to grow a small account is by moving your stop loss up and basically trying to squeeze as much profit out of the trade as possible. Now, if you had a larger account, I would say scale out as the stock is going up. However, with a small account, unfortunately, you don't have that leisure to scale out of your position because you're more than likely only going to be taking one contract. So say you purchase this contract for, let's just say $100, and the contract goes up to 130. Well, you're up 30%. So there's actually two scenarios that could happen here. You could say, okay, I made $30 today on my $100 investment. That's a 30% return. I'm going to take the money and then I'm just going to dip out for the day. Or you could say, okay, I'm going to put my stop loss up to at least break even, because now at this point you're playing with the house's money, and then maybe those contracts go up to 150. Boom, you made 50% on your initial investment and you can just pull out right there. So starting with $500, your first day you made 50, that's a 10% return. But yeah, the biggest thing is going to be finding a strategy that works for you. So it's going to take a lot of education. Again, make sure to check out the channel. I got over 550 videos teaching you on how to trade and sharing my entire strategy. strategy. And basically what you see on this screen right here is pretty much my entire day trading strategy. Stacked EMAs with the TTM squeeze. Again, I got tons of videos on how to do that. But yeah, so QQQ, definitely something that you should look into if you're a small account. The other one is going to be SPY. They pretty much move together. So if we're looking at the SPY, we can basically see the same thing today. It had that high point right there. Once it broke above it, the 3-minute stacked EMAs to the upside, 1-minute stacked EMAs to the upside, and then the 5-minute just followed through. So if you ended up going long on SPY, again, you could do the same thing, trail your stop loss, put it to break even. Eventually, once you're satisfied with your profits, you can pull out and then call it a day. So if you are a small account, the one thing that you do want to avoid is over trading. So if the very first trade you take is a winner on your small account, the only scenario where you should be getting into another trade that day would be if it is an absolute A+ setup and you should only be using the profits from your first trade. So say you made $50 on your first trade when trading QQQ and you're like, okay, SPY looks really good to the upside. I do want to try some calls. Well, in this scenario, you should only be risking $50 on that trade, if not even less. So at the end of the day, you still come out green. This is something that I see a lot of small account traders mess up on, is they go back into the trade using their profits plus more, and then they actually end up red for the day. So if you take a second trade, one, it has to be an A+ setup, but you should only be risking what you made in your first trade. Now, let's say your first trade is a loser. Again, if you're a small account, I would personally say take the rest of the day off and then just go back and journal what happened in this trade. What made it a loser? Could you take a second trade and could that second trade be a winner? Of course it could, but in my opinion, it would be more beneficial for you to just take the day off, journal, and then come back tomorrow. Remember, the market's always going to be here Monday through Friday, 9:30 to 4, unless that Friday is a holiday. But yeah, the market is always going to be here. So don't stress about one losing trade today, because tomorrow you can make back more than what you lost, plus even more on top of that. But yeah, that's going to be a quick little video on how to start trading with $500. Again, make sure to open up a cash account so you have unlimited day trades. Stick to a little basket of stocks that offer affordable premiums for your account. And you should never be putting all $500 into one trade. Trail your stop loss, eventually getting your stop loss to break even, and then pull out when you are satisfied with your profit. And then on top of that, if your first trade's a winner, only go into a second trade if it's an A+ setup, plus only using the profits from the previous trade or only risking the profits from the previous trade. And if your first trade is a loser, go back, recap what went wrong, come back tomorrow and kill it. But again, real quick, if you guys did enjoy this video, make sure to click that like as well as clicking that subscribe and that bell icon. Again, we are super close to 20K subscribers, so make sure you guys are clicking that subscribe button. I greatly appreciate every single one of you. You guys are amazing. As always, everybody have an amazing rest of your day, and I'll see you guys in the next video.